Hi, this is Julie, J Auto Trading Strategies. It is Wednesday, February 10th. It is a little bit after 4:30, about 4:45 p.m. Central, and I want to take a look at the Nasdaq market with you to go over how you would set up trading an instrument that was not working in the direction of the higher time frame trend. The indexes today, the ES and the NASDAQ, were really set up for these shorts like they have been in um, for this last month. But today and overnight, we had a low close yesterday, and then we had overnight news that brought the market up, giving the market some hope that there was going to be a rally. And each time the rally occurred, it came back to the lower daily VWAP where somebody, I won't say who, was holding this market up and sending it up each time it hit this VWAP lower band. So it kept this trend alive where we were going opposite of what the higher time frame trend was showing. To give you a historical context on this, here's a 60-minute chart with the VWAP for the contract. You can change your VWAP from daily, weekly, monthly, yearly, and contract. And when you change it to the contract, that will be for your contract period, March 16th. We're about ready to switch this contract, I think, but for right now, it's still March 16th. And you can see that we've been trading below the VWAP deviation, indicating that we really should be looking for shorts in this market. But we got some good news out of the market overnight, or what we thought would be good news, and the market started rallying up to that deviation band. So where it failed, and that's where the excellent short signal really would have been. Traders watching this level would have picked up on this as it coincided with the daily upper VWAP deviation band. So this really was the appropriate trade for today, but it would have been against the what you're seeing on your chart for your direction guide. So you have to be a professional, astute trader to recognize that you're trading in a market that is not set up for an ideal trade situation. If you did want to, attempt longs in the NASDAQ today, I have the super trend indicator on my chart, also with the high-low indicator, the GAN high-low, which gives you a closer stop line. So I have my outside stop line and my inside stop line to help guide me stay in these retracements if I want, so I don't have to jump in and out of a trade and hold it and then move up. That is what trading with the direction guide strategy. But again, most of the time you would be trading definitely against the weekly daily, and that's really a big no-no for the direction guide. You want to trade always in the direction of the weekly daily. But still you had your short-term trend opportunities. This was not a trade because this first one, even though it made money, you're trading against the super trend. So when you find yourself again trading counter to what the higher time frame trend is telling you, you really do want to wait for that super trend to get pierced and then trade that first pullback after that super trend, and there's your money shot. Here's the trade to take after this candle closes, and that was good for $500 on one contract. So I mean, there is money to be made in these markets, but the best money was taking this short up here and recognizing that that was the right time to take it. You could have taken the trade off either at the open or at the daily low. We got a second opportunity to enter a short up here, but we also got a second opportunity for a long, because our super trend and high-low indicator gave me that permissive for a long to go in the direction of the direction guide. And there again, you have another $500 one contract trade opportunity. Once you start seeing the super trend indicator painting red, you don't want to be trading long. You do not want to be taking these at all. None of these are permissive. So just stay out of the market. If you want to trade, then trade your weekly, daily, and then wait for your super trend to set up, as well as your candles to set up selling short like it was in the afternoon. Once we get below the yesterday close, then of course we're going to get back into the red with our direction guide and start getting the red candles set up painting like we are used to seeing, and making it much easier to trade. As you can see, much easier to wait for these setups and then jump in the market, so that you're swimming with, not like a salmon upstream, but you're cruising down the river in your raft, just flowing with the water flow, so making it much easier to trade. So I just wanted to show you that we were like salmon trying to swim upstream and running into the bottom of this contract low, and it just wasn't going to hold, so it kicked back. Now on the daily, let me show you on the Nasdaq, as long as we're talking about the Nasdaq. Turn this. I was looking at gold. Sorry, hang on one second. That was a big run in gold today, wasn't it? Here we are in the Nasdaq, and here's that August 24th low that we hit a couple of days ago, and I think that we're definitely going to retest this again. I don't think that we're going to get out of this market to the upside. I think we're going to be clearly breaking down now the direction, running away from this contract value and lower. And if you bring this all the way back, here are some gap lines. You might want to write this down. 38.71. Make sure that's right. 37.67.75. I'm sorry. What? No, I'm sorry. 38.71. That's correct. 38.71. And then for the high, 38.40. So here's your gap line. That first touch of this gap line on the 38.71 will probably give you an intraday bounce back into this support or resistance, and then it'll come back through and just fly through to come to this bottom gap line, bounce around, and then break through. This is going to be so much fun to trade. I love these gap lines. So that's been sitting there since October of 2014. So that'll be a good one to trade. So we've got some fun coming up in the NQ, and I don't think it's going to be higher. I think it's going to be all lower for your ES and your NQ. Wait for your direction guide to turn around, that you're trading below the yesterday close. And if you can't wait, if the market is set up incorrectly again, going for a last gasp higher for whatever insane reason, like it did today, wait for the super trend bands to come and just pretend that you're seeing red instead of green. If you have to trade that market, there are other markets that are weekly, daily, 60, 15, all printing across the same color. So it's easy to trade those. We just keep thinking to ourselves, how high can gold and the bonds go? Well, it's the same thing as how low can crude go. And it seems like after Janet Yellen's testimony to Congress today, she made it pretty clear that they need to raise rates because they need the interest to pay back themselves, back the money for the stimulus that they've been handing out like candy. So they need those interest rates to be higher. Um, so I'm clued in on that. So they're between a rock and a hard space. They really cannot go lower. They can only go up, and it's hurting us financially every time that they don't raise. So I think there's a little bit of a conflict of interest happening, but what can you do? Extraordinary situation. So be watching for those gap lines, and y'all have a great evening. Thank you so much.